Hi, everybody. It's Eduardo Aguilar, and I am with Grinder Real Estate, but I'm also a member of the Sacramento Association of Realtors Cultural Diversity and Fair Housing Committee, and happy to be here today with Jeff Sipes from Blue Water Credit. And Jeff, thank you so much for joining us today. This was supposed to be part of a series for our housing fair that we were supposed to host a couple of weeks ago, but we had to kind of tweak it with the pandemic. And so we still want to put out some great content. And Jeff here has made himself available to bring you some incredible kind of insights. So if you're struggling with kind of credit, here's some great tips for you to kind of get on that path. Before we jump in, Jeff, why don't you tell us a little bit about yourself?
Yeah, so I've been married to my wife 16 years now. We actually met 19 years ago today on a cruise down in Mexico. So who knew?
Yeah, right.
But yeah, so we have 3 children. Our oldest son is turning 13 on November 5th. We have a 10-year-old boy, and then we have a 4-year-old daughter. So love hanging out with them. They're all real active. So both my boys play competitive sports. We're going down to Las Vegas for a competitive soccer tournament here in about a month. So, but outside of work and helping people build credit, I like to mountain bike ride or exercise, anything I could do to stay active.
That's great. And can I ask you, before we start to jump into the tips, what kind of got you into this business? Because it's, not a business that you hear a lot of people saying, like, I want to get into this, right? But like, what drew you to this particular work?
Sure, I'll give you the Reader's Digest version of my story. So I was actually playing football for USC, that's University of Sierra College in Rockland. And my best friend and I decided to drop out because we wanted to start a business. So we dropped out of college, started a business, and about 8 months after we'd started the business, we borrowed a ton of money and just weren't making it. So I was at a fork in the road. I needed to either file bankruptcy or try to dig myself out of this big mess, this financial mess I got myself in. So I borrowed money from friends and family. So for me, bankruptcy wasn't a good route to go. So I went into work in the fitness industry, selling gym memberships, working 7 days a week. And after about 18 months, I dug myself out of the mess. Well, I went into a local bank to open up a bank account. And I remember they pulled my credit, and the gentleman came back with paper saying, Mr. Sipes, I'm sorry, but your credit's so bad, I can't even give you a debit card. And I was like, my credit's so bad, I couldn't even get my own money.
Yeah, seriously.
Yeah. So I left there kind of embarrassed and ashamed. And then about 18 months later, a friend of mine told me he was working with an attorney to repair his credit. And I was like, what? You can repair credit? I had no idea. So I ended up repairing my own credit. And then about 18 years ago, bought my first house. And then I ended up flipping it to someone moving up from San Jose. And so I made a little money on it. And then so I started buying and selling homes on the side. And I was telling all my friends and family, you guys got to go buy a house. And so a few of them came back and they're like, oh, I tried to buy a house, but I couldn't due to bad credit. Right. And so 2008, my wife and I, we were on a hike up in Auburn, and we were just kind of talking about life and everything. And so, I had this passion for helping people. So prior to starting Blue Water Credit in 2008, I was passionate about fitness. And so fitness and finances are kind of like something that we're passionate about. And so, she's like, what we should do with the downturn in the economy, it'd be a great time to get in and open up a legal and ethical credit repair business, because we know a lot of people are going to be suffering from the outcome of the recession, the Great Recession. So my wife and I started our business 2008 in our house. And so just in the last few months, we've actually helped our 10,000th client. So we have 16 employees now, and have we're grateful for the opportunity to serve people all over the United States now. People are finding us on the internet all over the US for credit repair. So sorry for that long-winded answer.
No, not at all. I think it's great to kind of hear, because I think a lot of times people kind of assume that you haven't been in their shoes, right? Mm-hmm. Because they just see the point that you're at now and kind of assume that that's where you just have always been. So to hear that you kind of found yourself in a situation where, like you said, they wouldn't even give you a card for your own money. I think more often than not, people do find themselves, because, like, even for myself, love my parents, financial literacy was not part of my upbringing, right? So it was one of those things where if they accepted it, if the credit card didn't get rejected, that was our financial management, right? Yeah. If there was still credit on the card. And so this, similar situation, left college and found myself with a low 5, I think, credit score. Because everybody's just handing you credit cards and you don't know how to manage that, and you're ringing them up, and maybe you make a payment, maybe you don't. And yeah, it took really my wife, who was just incredible and did have some financial literacy kind of coming into the relationship. And I mean, now we just jockey for first position, when it comes to our scores, and we're very grateful to be where we are. And I think for me, working with clients on the real estate side, I think they don't understand kind of why. So tell us a little bit why, like what role does credit play in buying a house?
Yeah, so your credit score basically determines how much risk the bank has with loaning you money. So if you have a really high credit score, the bank feels safe with loaning you money. But if your score is below like 740, for instance, usually you're going to pay a higher interest rate or higher fees than other people will. So MSN Money did an article a few years back, and they said people with low scores below a 640 tend to pay about $300 a month more in interest than people with good credit. Wow. So, I always try to, have, be an advocate for our clients, and imagine, if you had an extra $300 a month, just based on your credit score, you could put that money towards your retirement account or your kid's college fund or something.
Yeah, totally. So now that we've kind of covered some of those grounds, I'd love to just kind of start jumping into kind of what are the top tips that you see, or even maybe before we do that, like what do you see coming in, when people do get referred to you? Yep. What's kind of the standard client that knowing that everybody's unique, but kind of what are the standard issues that you're coming across?
Yeah, so just for clarification, so we mainly work with real estate agents and mortgage professionals. Mm-hmm. And so most of our clients are trying to buy a house. I mean, we have helped people try to get in the FBI because you need good credit, and we've helped a lot of business owners, but most of our clients are trying to buy a house. And so, like I said a minute ago, your credit score is going to determine your interest rate. So most of the time, banks have a minimum credit score requirement. For a lot of banks, it may be 640 or 680, depending upon your loan program. But what we'll do is we'll review credit reports with our clients. We're looking at the delinquent accounts. We're looking at credit card balances. We're looking at open accounts. And then we're just really kind of giving credit scores like a recipe, right? So there's 5 ingredients. So they look at payment history. They look at how much debt you owe. They look at the age or history on your account. So longer history is better. And they also like to see multiple accounts open. So 1 to 5 credit cards. They like to see a car loan open, and then also a mortgage. And then the last part that they look at is how often are you applying for new credit? Right. If you have a lot of new inquiries, credit inquiries on your credit report, it's going to definitely impact the score. So between those 5 areas is how they calculate your score.
Yeah.
And so easiest way to raise your credit score is to pay down your credit card balances.
Okay.
Yeah. So FICO says one maxed out credit card can drop your score by 40 to 50 points.
That's crazy.
So if you have a $300 credit card and you're using $300 on it each month, even if you're paying it off, your score could be 40 to 50 points lower than if you're just charging a small balance on the card. So
go ahead. Sorry to interrupt. Go ahead.
Yeah, that would be my number one recommendation is to get your credit card balances down below 10% of the limit. And then that'll boost your score. Usually takes up to 30 days. And then you'll see your scores jump up from that.
And that's exactly what I was going to ask. It's kind of like, what's a good range for folks to keep in mind based on their credit card usage,
yep.
To stay below. So you're thinking, or you're saying, suggesting 10% is a,
yep. Like, so if you have a $1,000 credit card, you want to charge between, $5 and $100 on the card each month, and then just pay it off.
Yeah.
Now, what's interesting, people, if you are trying to apply for a loan in the next 45 days, that's a good practice to have. But if you're not trying to apply for a loan, or you don't have to worry about your credit, I mean, you can max your cards out, but then your score will be lower for 30 days. And then once you are getting ready to apply for a loan, you want to have your card balances paid down between 1 and 10%, usually 30 to 45 days prior to your application being pulled.
That's good to know. So, I mean, this is definitely steps that folks, because we normally get calls from folks because they drove by the house, they saw the for sale sign. It's just like, oh my gosh, they want to dive in right at that moment. And more often than not, we find that they're not quite in the place to even start to talking to a lender. And so I think that's a good recommendation. So about a 45-day, maybe even 2 months, to kind of give it a couple of months for it to season in the right way would be a good step to take.
Yep, exactly.
Can I go back to one of the things that you mentioned, because I always hear this, and I've found, I understand the logic behind it, or the aversion to it. But you mentioned, like, it's good to have about 5 credit lines, right? I recommend this to clients all the time. I'm like, look, if you have a couple of credit lines open, it might not be a bad idea to open one more. They're like, but I'm trying to improve my credit. Isn't that going to hurt my credit? And it's like, maybe you'll take a small hit because you'll have that inquiry, but you're also going to show a bigger percentage of credit that you have access to that you're not utilizing. And so I don't know if I'm going too far into the weeds on that, but could you talk a little bit more about why it's beneficial within reason to have more credit lines and not open?
Yeah. So for a perfect credit score, if you're really trying to get up there like an 800 or something, FICO likes to see 6 accounts open, paid as agreed. So it could be 1 to 5 credit cards, it could be 1 car loan, could be home loan. So if somebody doesn't have, only 1 or 2 accounts open, now you might want to check with your lender, but I know there are some minimum trade line requirements. So some loans do require that you have 2 or 3 accounts open for 12 months or more. And so, but another secret that you could do other than paying down credit card balances is adding it as an authorized user to someone else's credit card. So if you have a spouse and they have an old credit card, your spouse can call in and add you to that credit card as an authorized user. And then that credit card's history all shows up on your credit. So it looks like you've had the card since, 10 years. If the card had a 10-year payment history, you would instantly get that 10-year payment history on your credit. So that's kind of a credit hack. And then the flip is also true, is if you're on a credit card as an authorized user and it's maxed out or it has late payments, you can have the primary cardholder call and remove you, and that'll come off your credit.
Okay.
So you can add to the good credit card or remove yourself from a bad credit card, and that'll boost up the score.
And can I ask, and I found it to work both ways, but it's not limited to just spouses or it could be anybody, it could be grandparents.
Yeah, it could be anybody. Now, I would throw a caution out there. Some companies do sell these trade lines, and it's usually $500 to $1,000. And I know that from everything that I've seen, that's an illegal practice, and that's not something that we recommend doing. So if you're asking a friend or family member to add you as a credit card as an authorized user, just don't be paying a lump sum of money to someone for doing that, because that's not good practice.
Yeah, borderline, I want to say the F word, but fraud.
Yeah, exactly. That is definitely an F word.
Yeah. No, well, that's great. And so you talked about, that's one good tip, is adding yourself onto somebody who has good credit. And the key is that they have good credit and they have a good history on the card, right? You don't want to just kind of piggyback on somebody that's in the same boat. What are some other, and I don't want to call them quick tips because I think that takes away from the value and the impact, but what are some other kind of recommendations that folks that are within that 45-day window know that they want to be able to go, and let's say hypothetically they're at a 580. So they need to jump almost a minimum of close to 60, if not 100 points to be in a much stronger position when it comes to a loan.
Yep. So not to beat a dead horse, but step 1 is always paying down credit card balances. Step 2 would be adding to someone's credit card as an authorized user. Takes up to 30 days to report. Step 3, if you have medical collections, so some medical collection companies will actually agree to delete it from your credit report for payment. So if you have any unpaid medical accounts, you can contact them and potentially work out an agreement for them to delete it. I always use this analogy because we have a debt negotiator on staff. I say, settling debt's a lot like harassing a beehive. You just have to be prepared, right? So the collection agency is going to be trying to get information from you to use against you. So if you call the collection agency and you're like, hey, I'm trying to pay off some debts because I'm getting ready to buy a house, they know that they have you over a barrel. And they're less likely to take a settlement or to do anything you want because they have an understanding that they're probably going to get their money. So it's like playing poker too, right? You don't want to show them your hand, so to speak. So we never recommend lying to them, but you don't have to confirm addresses. You don't have to confirm information on that. So we have a high success rate in getting collections deleted for settlement. And so that would be a third option. So paying down balances, adding to someone's credit card, and then potentially settling a collection to be deleted from your credit. And just to clarify too, paying a collection does not take it off your credit report. You have to get them to agree over the phone to delete it. And then if they will send you something in writing, then that will help protect you, because once you pay the collection, if you don't have something in writing, it's unlikely they're going to do anything in your favor.
And so, so make sure that one, they say it over the phone that yes, we will delete it. And then, there's the next question just, can you please put that in writing, and when can I expect to get it by? Like, just be as direct as possible with that.
Absolutely. Yeah. Sometimes they'll email it. Sometimes they'll fax it. Some companies' policies, they won't do anything. So if that's the case, then you kind of have to take their word for it. But if you can make sure, if you can record the call, great. If you document everything, make sure you're writing down who you're talking to, the time you called, if you get an employee number or anything like that.
Smart. No, I think that's such a great recommendation, because I do think that, you know, when we deal with customer service, it feels fairly anonymous. And so, sure, I spoke to somebody and they said, yes, we'll delete that. And I'm like, great. And I'm waiting a couple of months and I'm like, it's not going away. And when I call back and they ask, who'd you speak to? I'm like, I don't know.
Exactly.
I called and, you know, so no, I think documenting that, asking for a name and employee ID number or whatever you can to make sure you're able to kind of connect the dots if need be is great. Can I ask you, because when I talk to clients, you know, they look at services like yours and they're like, well, I can do it. And I say, yes. And as you know, people do successfully kind of navigate this process on their own, but it's kind of almost like buying or selling a house on your own. It's kind of like, yes, technically you can do it.
Yep.
But it's time, it's knowledge, it's expertise, it's relationships, it's all these things that you're not going to be able to tap into when you're just doing it on your own. But I mean, like, what are some of the things that you're doing that could be done by a client, but that you guys are doing at a couple of clicks up in terms of the, you know?
Sure. So, I mean, just like anything, like we've done this over 10,000 times. We've worked on over 100,000 accounts. So, and then what people don't realize too is I don't know how accurate Zillow is, but Zillow is forecasting a home appreciation of 7%, you know, and so if it's a $300,000 home, 7% is $21,000. They're forecasting it to go up. So about the home prices are going up about $2,000 a month. So if they hire a company like ours and we can get the client there 2, 3, 4, 5, 6 months sooner, then they're really shooting themselves in the foot, because they say they paid us $1,000, but we fixed their credit and they were able to save, you know, $2,000 a year on interest. Plus we got them into their home 6 months faster.
Yeah.
I mean, that could be like a $30,000 swing right there. So if you don't want to pay $1,000, if I'm a financial planner and I said invest $1,000, it'll turn into 30,000. I'd be doing that all day long, right?
Yeah, absolutely.
So, yeah.
Yeah.
You are right though. I mean, you can repair your own credit. You can file your own tax return. You can for sale by owner on a home. I mean, you could do all these things, but you know, given the amount of money, if you're trying to buy a house, it makes sense to use professionals, in my opinion.
Yeah, no, I think, you know, and it sounds self-serving, but I think it is. It's like, this is what we spend our entire day thinking about, right? So we know the ins and outs of these pieces. So because we want to keep these kind of manageable for folks, I kind of want to start bringing it to a close, but so I'm going to do my best to remember all the tips, or maybe I could just hand it back to you to kind of repeat the tips that you were giving earlier.
Sure. Keep your credit card balances below 10% of the limit. You can add to someone's credit card as an authorized user, or you can open a secured credit card. Most banks or credit unions offer a secured credit card. Then third would be settling a collection for deletion. And then lastly, if anybody's interested, we always offer a free consultation. We can review the credit report and go over exactly what's going to, because your credit score is like a recipe. So we'll give you the exact ingredients, so to speak, to have the best score. They can go to our website, which is bluewatercredit.com. You just input your information there, and then we'll be in touch with you right away to schedule a risk-free consultation.
Awesome. And I can't like emphasize enough how important it is to even have this conversation, because I think the instinct is just to like do all these different things, but in consultation with somebody like Jeff or somebody on his team, they're able to tell you, like, pay this one off because this is going to be a bigger impact. Maybe just keep paying this, right? So that you could really be as efficient as possible in how you're tackling any debts that you're carrying right now, rather than, as he suggested, with homes increasing at the rate that they're increasing month over month, a span of 6 months could put you out of contention for that home that was affordable when you started the process, that is now outside of your budget, you know, just because of the 6 month month over month increase in the price of the home. And so talk to professionals. If nothing else, you'll get a plan, but definitely great folks to work with, and they'll be able to get it down. Can I ask you, I don't know if you guys have ever done the analytics, but on average, how long are people working with you, and what's the average kind of, I don't know if it's a monthly increase or what that periodic kind of increases, but do you guys have that number?
Yep.
Yeah. So
our average client's with us 4.8 months. And average increase in credit score is 14 to 15 points per month. So, you know, if somebody, you know, I talked earlier about the price, your interest rate is derived from your credit score. So a 40-point increase in your score could literally save you $40,000 on a $400,000 loan over the course of the loan. So yeah, people don't realize that just because you're approved doesn't mean you're getting the best rate. So if your credit score is below 740, it makes sense to have us take a look at it and give you some suggestions on boosting the score.
Yeah, awesome. Well, Jeff, thank you so much. Such great advice. Please, we'll make sure to have the link and information to get a hold of Jeff and his team. Take advantage of that opportunity to have that consultation so they can really kind of do an analysis and give you some guidance. And if the opportunity is there to work with them, definitely recommend it. Jeff, thank you so much again. We really appreciate your time and your knowledge. And thank you for joining us on this webinar.
Thanks so much for having me. Have a great day, everybody.
Take care.